Hi guys, once again this is Alfred from BinaryOptionsTutor.com. I'm here today to talk about the first rule of accounting. I know, don't turn me off, please. Don't. Because this is something that if you apply it to any business, and especially if you apply it to your trading, you'll find that you're going to, with a high probability, you're going to increase your uh, trading efficiency. You're going to get more profitable. Once you can stay cognizant of this rule, and once you can consistently apply it to your trading, because trading is a business. We've been involved in music for a long time, and one of the things that always struck me with music is a lot of people don't like to look at music is a business, but even music, I love the creative side too, but the same time, even music is a business. Trading is a business. So we're going to talk about the first rule of accounting, and we're going to talk about some updates we done to our money management calculator and apply this powerful rule. This rule, we freelance for guys sometimes, and one of the guys we freelance for, he didn't teach me this rule. We learned this. I learned this rule when I was in college taking a class in accounting, and he used to bring this rule up. One of the guys we freelanced for, he would bring this rule up all of the time. It was a constant question that he would pose to me and pose to himself. And this guy consistently, with his websites, he would consistently make thirty to $40,000 a month. So this is a powerful rule, and when you apply it, you're gonna find it helps you to be successful in any business. Here's the rule. Assets minus liabilities equals profit. Now, if assets minus liabilities equal profits, let's go down here and let's define these variables, as my brother would say. What is an asset? Money in your account. That's an asset. That's your money. There's a guy, I won't call names, his name is Mr. Piptastic on our site. And one of the things he once said to me is he likes strategies, and that's all fine. The tutorials help a lot with conceptualizing, but the most powerful concept that he's learned on our site after visiting for almost the last 2 years, because he's been around a while, was just actually understanding that when he's trading, it's his money, and therefore he has the control. And so when you start applying this rule and understanding that it's your money in your account, that's rule number one. Now, what's the liability? Money risk trading. And that kind of sounds bad because it sounds like, well, see, if I've got it in red here, and if money risk trading is so scary, well, money risk in any business, there's a potential of loss. Uh, when we started, we done a lot of offline businesses. Majority of them, 75% of everything we ever done offline wasn't profitable. It was a total wash, a total loss. Easily exceeding $60,000, easily exceeding 70K, easy. And the only thing that I can say we done consistently profitable uh, was all of the time that we spent actually engineering and recording stuff at our home, and everything down to purchasing the equipment, advertising, promotion, etc. We always applied this rule here, that first rule of accounting. And we started to do that, and other people I've freelanced and worked with, when they start to do that, their trading becomes profitable. Mr. Piptastic, the guy I mentioned earlier, his trading is profitable, whether it's spot or binaries. His trading is profitable. There's another guy I talk about a lot recently on our forum, on our site. His name is Firehorse, and his trading is profitable. Now, he may give me more credit than what's due because he's gotten very proficient with the two core strategies and very proficient even using hedges. And we talked about some of that, but the real credit is the application. And once he started to understand the rule of assets minus liabilities equals profit, that every trade is a risk. You don't know whether you're going to win the trade or lose the trade. Um, that money in your account is your asset. Now, then what's profit? The money that you earn from trading that exceeds where your account started that period of time, whether it's a day, whether it's a month, whatever. However, you want to periodically look at your balance, that's profit. Now, that brings me over here to our money management calculator. We recently updated this calculator, and I'm always touting doing a positive martingale strategy. The reason that I'm always talking about a positive martingale strategy is because when you're doing a positive progression, what's going to happen, and this isn't even a martingale, it's a non-linear progression based on probability, and I didn't have this the way I wanted it at first, and now this is exactly the way I want it. I want to talk about three steps in this example. Okay, now we just finished talking about the first rule of accounting, and the whole point conceptually of this is to remain net profitable after we've won, while at the same time compounding some of our winnings. Now, if we start with a balance of $1,000 in risk capital and we're wagering 5%, we're going to have 20 shots at the market. That first time we're going to have $50. There's a potential profit of 35. We just flattened these to make this based on 70% since that seems to be the going rate on an offshore platform. Now, if you're able to win there, then you're going to move to the next step in the progression. That'll give you $78 to risk on that next trade. Total potential profit will be $61.60. Now, we reworded this right here to say retain if loss. And that's $7. That $7 comes from even if you lose on this next progression, you've set aside $7 so that you'll actually be offsetting the broker's edge and uh, keeping your account net profitable. And again, that's what we're trying to do, get our assets to exceed the liabilities based on that equity in your account. Okay, now if that doesn't work, you're going to go back to $50 in the progression. If it does work, you're going to have the 61.60, which is the $7 that you retained if lost, plus the profit that you made from the actual bet, which was 54.60. Okay, now If that does work and you're going to proceed to the third progression, then you'd be wagering 44.80, and there's a potential total profit of $120.96. If that third bet there doesn't work, you'll still retain, if lost, $44.80. Now, the goal again is to, regardless of what happens, because remember, trading, we had that in our little equation, is the risk. We're not aware of whether or not we're going to win. No matter how good your strategy is, you're not going to win every time. But when you apply money management, you're going to bring that in as one of your tools, and hopefully use this, use the math, use what you're already seeing, what's there when your account is net profitable, to keep some of that profit on the day. Now, after those three wins there's a total potential profit there of $120.96. And what did you really start wagering with? $50. Now, even if you went on and went back and started wagering again at $50, what's your net profit after those three wins? $120.96. So you've just tilted the math in your favor, as opposed to having the edge, the mathematical edge, in the counterparty's favor. And that is the secret. The secret to profiting trading is remembering it's your money, and remembering to do all you can to remain net profitable. This little uh, money management calculator is available free on our site. It's just an online calculator. It goes up to 3 steps, and I'm going to stop it there. My brother and I talked a lot. I know the second we done this, and originally there were 2 steps, we started getting emails saying, well, gee, what would you do on the third step? And eventually, as I often do, capitulate and say, well, okay, here's the third step. There's not going to be any more steps. I'm saying it here. It's not going to be any more steps, because the odds begin to exponentially work against you if you have consecutive wins, one after another. It doesn't mean it can't happen, but we're trying to play it with as much on our side as humanly possible. And this right here, this would give you more than twice what you originally started with, if you can pull off 3 consecutive wins. And that's something that's probably achievable for a larger sample of guys speculating and girls speculating on the market. So I'm going to put a link to the money management calculator in the description, maybe on top of this video as well. See you guys on the next video. Once again, this is Alfred from BinaryOptionsTutor.com.